Welcome to the daily update, where I'll go over the action in the market for Wednesday, January 10th, and then we'll see how things look for Thursday, January 11th. Had another update. We're still positive with our technicals, but we had been showing some weakness. It looks like we could be starting to shift over and show some improvement. Now, all of that could fall out the window because we have CPI coming out in Thursday's session. That's huge. That's what the market is really focused on right now. If it comes in hot or mixed to the point where maybe the Fed's going to be able to justify raising rates, that could really put some pressure on the market. If it comes in friendly, then that could really be more positive for the market. We'll just have to see if anything can be decided. Probably the most frustrating part will be if the report does come in mixed and it keeps things kind of gray. Typically, what we've been seeing lately is the employment situation is strong. And so when those reports come out, they tend to cause a little bit more fear in the market because that's justifying the Fed raising rates. When we've been dealing with inflation, we have seen a general trend of this going down, but we'll have to see. This is a new day, a new report. Anything can happen. The market's been taking some things for granted, especially as we finish 2023. It needed to get shaken up a little bit as we started 2024. Let's see if it can get back on that positive stance or if things are going to turn more negative. So, right at the open, we had a higher open and prices rose to R1 at 47.72. Then we fell back down to the unchanged level. Very common. That's more like filling the gap. And then once the price levels come back down to the unchanged area, then it decides, does it want to bounce up off of that? Because that often provides support. Or are we going to fall down and end up going negative and have prices go lower? As the day went on, we were able to bounce back up. So we got back up to R1. We kept climbing all the way up to R2 at 47.86. And then there was some late day selling. There was some comments that came out by one of the Federal Open Mouth Committee members, and that kind of spooked the market a little bit. I have the quote later on. But then we did see some buying coming right into the close, and we were able to close just about at R2. We were up 0.57%. We're still below average with volume. That is a little bit of a concern, but we've seen down days and up days now on below average volume. We are still positive with our technicals. We could be showing some improvement. We have one of our indicators, the parabolic SAR. It has now switched back over positive. And personally, that's an indicator that I put a lot of weight in. And the fact that the dot is now underneath, to me, that's shifting things more positive. I'll show you the chart later on. It's all about inflation in Thursday's session. Because of CPI, we'll have to see, does the market have enough to go on to really react to that one way or the other? And of course, keeping an eye on the geopolitical events. Some comments were now positive with the S&P for 2024. Not by very much, 0.3%, but after starting off negative into 2024, we've been able to recoup that now. Mega caps and growth actually outperformed in Wednesday's session. We're seeing a little bit of follow through, not so much with the mega caps, because we want to see more broad participation to see more strength in the market, but we need the mega caps to come along. It's growth that's showing some improvement now. We've seen a few days where our charts are showing some improvement. And then this is when New York Fed President Williams, who is a voter, said that he thinks the Fed will need to maintain a restrictive policy stance for some time. That came kind of near the close of the session. That ended up inducing some selling into the market, but then we saw a little bit of buying going into the close. The parabolic SAR has turned positive, and we already have one short-term overbought indicator, actually two, the Williams percent R as well as our very short-term stochastics. We're still dealing with a lot of intermediate-term overbought conditions, like the 50-period exponential moving average, the rate of change based on 50 periods. Our oscillators, they're showing some improvement, but they're still below their moving averages. And some of the PMO studies that we look at, we still have an extreme positive reading. The Sean Trend Meter is now a new addition to this list. The bullish percent index for both the S&P and the NASDAQ 100. The NASDAQ 100 is showing some improvement. The S&P, it's still above that 70 level, but more or less has been declining. And then our new high, new low study for the S&P based on 10 periods. Long term, we're still above these long-term moving averages based on 150 periods as well as 200 periods. And then this current scenario, we'll see if this ends up changing at all after Thursday's session, that the Fed is likely done raising rates to try to cut inflation or at least get it under control, and that they may, in fact, start to cut rates sometime in 2024. It had been looking like March, then it was looking like May, or is it June? I'm not sure. Now that's a little bit in doubt because they came back in the meeting minutes that we read from last week that they would be willing to raise rates if we see a lot of strength in the economic reports. The dollar was down and interest rates were up. We're up at 4.03% for the 10-year yield. We still remain inverted with the yield curves that we follow. Sentiment did tick up. We were at 73. Now we're back up to that 75 level where we're looking extreme positive. When we get into this territory, this is when we start to look at using this as a contrarian indicator. Our trend is still positive, but we're still below the moving averages, both in the short and intermediate term ADX charts. We've dropped below 40, so we're not extreme. However, the green line is still on top, so we still go with positive. Our bias is positive with the up day. And for right now, I'm keeping our momentum at mixed because we had a lot of down days. Now it looks like we're showing some improvement, but it's not a lot of conviction, at least to this point. The economic reports that came out, we had the mortgage applications index come in 9.9% up. Last week, it was down 9.4%, and we had wholesale inventories down 0.2%, as expected. Last time they were down 0.3%. Neither one of these are really influential. We keep an eye on them. We like to keep an eye on what's going on in real estate. Wholesale inventories, that means how many products that a company makes. Are they going out the door, or are they sitting on the company shelves waiting to go out the door? Here's some charts showing how the mortgage applications did see an increase over the previous week, and we're still negative with wholesale inventories, but we have been ticking up lately. Then I have a few charts here. This is something you kind of have to project out into a year, but it's what are the valuation ranges looking forward when we look at the PE ratio, the forward PE ratio. When we look out into the US, we're at about 19.7%. Now, it depends on what you look at. We have other charts that give us different figures, and this changes every day. And then you look at the different countries here, but when we look at the world PE ratio looking forward, we're at 17.2%. So we're above that 15 level, but still below 20. Just something that's kind of more informational than anything. And then just shows kind of what we've already been seeing, that going back to August in 2023, stocks and bond prices have been correlating quite strongly, and we watch that very closely, and this just kind of confirms that. Here's our intraday chart where we did have a higher open. We came back down to the unchanged level, and then we stayed under R1 for quite a while. But eventually, we were able to break out above that, get up to R2, actually break above R2 a little bit. This is when we saw some weakness coming in, and then we saw a little bit of buying going into the close to help things improve. Our intraday chart, where we were kind of getting down to the unchanged level and a little bit negative before the market opened, we saw the strength during the session, and we're actually up. We were about 0.25% up right before I started recording, but that's many hours before the market opens. We are now seeing some improvement with the growth to value ratio intraday, where the blue line is starting to come back above the red line. That's encouraging. And we're also seeing some improvement with our S&P 500 growth to value ratio, where we're positive, and we've seen a real improvement over the last few days. End of day charts, we did really outperform with growth on the large caps. They were up almost 1%, where value was just barely up. For the mid caps, growth did outperform value, and they were even when we look at the small caps. And so we have some damage to repair here, but the fact that this ratio is going back up, that's encouraging, but we are working off of a recent death cross with this ratio. And keeping an eye on our trend, we're dropping below 40 with the ADX. We're below the moving average, but the green line is still on top. We're seeing that same thing when we look at our short-term ADX chart. We're still below average with volume, and that's a bit of a concern, but we're not quite sure what to read into that because we've seen it on up and down days. Sentiment, we turned down just a little bit with the Ulcer Index. We're still below the moving average. We also saw a decline with the VIX with the line chart as well as the bar chart on an up day. Not surprising. We're seeing the VIX of the VIX really get down to this previous low range now, and that usually goes down on up days. And so this is getting to kind of an extreme reading. We're keeping an eye on this. We did just barely get above this zero level. This is kind of the trigger point. When we look at the VIX to S&P 500 correlation, it's now starting to come back down, but it came down on an up day. When we get a real high reading with this, oftentimes that marks some kind of fear in the market, and we see a decline after that. So we'll have to see how it plays out. Looking at this other fear gauge, we're starting to decline for the most part, and our other fear gauge is also showing a decline. When we look at the risk on to risk off ratio, this is a little bit of a concern. We're actually down with this ratio. It has been coming down, and then we saw some improvement for a couple of days, but on not a real solid update, but on a fairly good update to see this the risk on to risk off ratio not show a lot of improvement. That's a little bit of a concern. Our advanced decline line studies, we actually declined. That's the interesting thing. We were up with the S&P, but internally the market was weaker. We declined with the advanced decline line based on price and volume. And we did see a bit of a new reading here with the new highs. They're breaking out just a little bit, but we're still going sideways with our 5 period, and we're declining with the 10 period. We continue to be positive with the advanced decline ratio. The accumulation distribution continues to be positive. We're still dropping off here with the chicken money flow. This is another smart money indicator that we follow. The moving average continues to decline after giving us a really extreme positive reading. But we'd like to see this turn back up. It's not doing that yet. And this kind of shows what I just mentioned, where the cumulative advanced decline line for the NYSE, it was actually down. And then our regular advanced decline line also declined. We also declined with the common stock on the NYSE based on price as well as volume. So there wasn't an awful lot of strength internally. This other NYSE advanced decline line also declined. Looking at our advanced decline line studies, we were up just a little bit with the common stock using this method of measurement. We were flat with the S&P, up a little bit with the mid caps as well as the small caps, but the small caps have been lagging behind when you compare it to how other advanced decline lines have been performing. Here's our daily chart where we're coming back up to this previous high that we set. Excuse me for having to keep clearing my throat. We're not back to the all-time high yet, although we're not very far away from it either. If CPI comes in friendly, we could end up breaking through and actually setting an all-time high. If it comes in cloudy, we're probably going to chop around sideways. If it comes in hot, then we might see a decline from here. On the bottom, we also see where volume is below average. We're extreme positive with the Williams percent R. This is one of our short-term oscillators. And we still remain positive when we look at the decision point trend models. We're still negative with the PMO signals, positive in the midterm and negative in the long term. We're not extreme with the 20-period moving average study, but we're still extreme with the 50, and we're just barely extreme with the 200. And we're starting to break up a little bit above the 20-period moving average now. So this is rather encouraging. Can we stay above that? The force index is showing some improvement, just a little bit above its midpoint. And the short-term stochastic starting to get extreme positive, showing some improvement in the intermediate term, turning up, and still kind of looking positive in the long term. We're up into the +2 channel for our standard deviations chart, so we're not necessarily extreme that way. And we're coming back up with our 20-period double and triple exponential moving average study and seeing these lines start to turn back up. Intermediate term, we're still positive with the balance of power, even though it declines slightly. We're still positive with the go, no-go system with the darker blue bars, showing some improvement above the midpoint with our highest high, lowest low values chart. We're still seeing some weakness here with the TTM squeeze. It's positive because it's blue, but it's a darker shade of blue, so it's leaning a little bit more negative, but we'll have to see if that can eventually turn and go back up. With our 50-period double and triple exponential moving average, we're right in between the two right now, but showing some improvement. We're looking a little bit more positive with the ease of movement. We're above zero. The Arun indicator, we're declining with the buyers. We're also declining with the sellers. So we're flat with our oscillator, but our oscillator is positive because it's above zero. The S&P McClellan oscillator ticked up a little bit, but is still below zero. That's short to intermediate term negative. So we're still declining with the summation index based on price. We continue to decline based on volume. That has not switched over positive, at least yet. We're also looking more negative with the NYSE McClellan oscillator since we're still below zero. So we're declining with the summation index for the NYSE based on price and volume. This is a little more positive. The Swenlin trading oscillator based on price is now crossed back above zero, and we're just barely above zero based on volume. So that's showing some improvement, but we still continue to decline with our PMO. We're declining based on price and volume. We're seeing this longer-term negative divergence with the PMOs that are rising, also a negative divergence with the buy signals, and we're still extreme positive with the PMOs above zero. We continue to be positive with the Elder's Impulse system for the S&P, and this is kind of a big thing. The parabolic SAR is now drawn a dot underneath. That is switching from intermediate term negative back over to intermediate term positive. But on a short-term basis, the slope oscillator continues to decline. The MACD is trying to turn up a little bit, but is still declining. All of our oscillators are below their moving averages and declining, but trying to show some improvement. We're going to need to see some follow-through here. And we're still above the 20-period moving averages here in our moving average tree. We continue to decline with the bullish percent index, but we're still extreme positive. We're coming down just a little bit with the NYSE bullish percent index, but still above 50. And we turned up a little bit with the NASDAQ 100 bullish percent index, and we're back to being more extreme positive. The Sean trend meter did tick up, and now we're starting to get an extreme positive reading. Coming more above the 0 point here with the Chaikin oscillator, that's turning more positive. We declined with the money flow index, but we're still above 50. And we're showing some improvement going above 50 with the ultimate oscillator. We continue to be positive with the vortex with the green line on top. We're still getting a really extreme reading with our rate of change going back 50 periods. My goodness. And we're looking more positive with the RSI based on 14 periods. That's advancing as well as 9 periods. So we're seeing some improvement in the short and intermediate term, but still some points that are concerning us as well. On balance, volume continues to advance above the moving average. This is longer term. We're still above zero. That's mainly what we're watching for here. This is the S&P on top, and then the NYSE new highs minus the new lows. So we're comparing the S&P with the broad market. The longer it stays above zero, the more positive it is. We spent most of 2022 and a lot of 2023 below zero. That would shift things over if we could stay above this zero level. But we're still looking kind of extreme here with our 200-period moving average study for the S&P. We declined with the 50-period moving average after giving us an extreme positive reading. And I'll probably not show this after Friday's session with the 50-day cycle. We did start off by coming down. We started a new cycle on January 2nd. Now it's starting to go back up. Our different charts, we're getting a bit of a mixed picture here. We're looking better with the Heiken Ashi. We're still negative with the Kegi chart, but we're pointing up. Red is negative, but the fact that it's going up is positive. We're looking a little more positive now with the Renko chart, and we're looking a little more positive with the 3-line break as well. And we're still extreme with our 150 and 200 period moving average study. We're still above the long-term trend line, both for the NASDAQ 100 and the S&P that I just looked at. Our different indexes, the S&P did outperform the equal weight index. So we went up here with our ratio, showing that the mega caps did do better in Wednesday's session. This is still negative and a longer term concern to us, where we're unchanged on the year for the Dow, but we haven't set a new all-time high yet. We're really struggling right now with the transports. They're trying to turn back up, have not exceeded this previous high. We declined slightly with the utilities, and the transports continue to underperform the Dow. The Dow is hanging in there. It was up 0.45%. and it's switched back over to positive with the Elder's Impulse system. And we are showing some improvement here with the NASDAQ. This is looking a little bit more healthy as we advance. Also seeing a little bit healthier looking chart for the NASDAQ 100. We're positive with the Elder's Impulse system for the QQQs. But when we look at the momentum, it's improving. It's trying to turn up, but we're still below the moving average. Small caps kind of dancing right along this pivot point. We're up, but nothing really all that strong. We've switched from being negative over to neutral now for the Elder's Impulse system when looking at the small caps. We're still below this. Now it would be resistance area here with the Russell 2000 small caps. We're a little bit below 50 with the RSI. We are working off of a recent golden cross, but shorter term momentum continues to be negative. The mid caps are a little bit above the pivot point, and they've switched from being negative back over to neutral for the Elder's Impulse system. The FANG index was up over 1% and is showing some more strength. The dollar is pretty much chopping more or less sideways right now. Keeping an eye on interest rates, we were up just a little bit with the 10-year yield. We were down with the 10-year based on price. And then looking at growth to value, seeing a little bit of an improvement with the Qs to S&P. We're flat with discretionary to the S&P. A little bit of an improvement when we look at large cap growth versus large cap value. So with the large caps showing an improvement, the mid caps, small caps, yeah, they're ticking up, but they're still below a declining moving average. We're still pegged at the top with our 10-day average of the S&P 500 highs minus the lows. We're still above zero when we look at the highs minus the lows, take a 5-period moving average and measure the broad market. And we're still coming down a little bit with our highs minus the lows based on 50 periods for the S&P, but we're still well above zero as well. We're starting to come down, even though we ticked up a bit with the 2-year yield, but this is showing a decline, which often support the S&P. So what's our outlook for Thursday? The banks are going to start reporting their earnings coming out on Friday, and that's typically the mark of the beginning of earnings season. And we're wondering, is the January effect over? We're not seeing an awful lot of strength right now in the small caps and a little bit of strength in the mid caps. So far, we're 0 for 2. We're 0 for 2 with our trifecta. We have to wait until the end of January to get the third score. Our technicals are positive and showing some improvement. We're still above the 20-period moving average. We'll get weekly jobless claims, and then the big one is going to be CPI, and then we'll watch all of the geopolitical events. We're going to get PPI in Friday's session. So seasonally, when we look at January 10th, we're neutral to negative with the Dow and S&P, just a little bit under 50%, where we're slightly over 50% when we look at the NASDAQ. And then this is something that I showed in yesterday's video, where what happens when we have a negative Santa Claus rally, which is what happened, and when the first 5 days of the new year are negative, which is what happened. And it doesn't look good for the month of January, but when you project out, especially when you go for the full year, it tends to be positive overall. Then another newer chart put out by Carson, it says a weak first 5 days could be a warning sign. Well, it's getting beyond that 5 days now. We were down less than 1%. So when you look forward at the average returns, we're up 57.1% of the time with a return of 0.7%. Nothing too gangbuster. We'll be on the 8th trading day of the month, where we do see a little bit of weakness during an election year with the S&P 500, but we do see a bounce after this. And then we're wondering where we're at with this whole January effect, if that's going to kick back into gear. We are pretty choppy, and that's kind of fitting into seasonally now what we typically see during presidential election years. And this is pretty much flat to start off the year when we look at the Stock Traders Almanac statistics. But when you have the current president who's running for re-election, we seasonally should be seeing more strength here, but it's just not working out that way, at least yet. Now, that could change, but it could also turn negative. We will be in Thursday's session, where it tends to be the third most positive day of the week. So our scenarios, we're not going with the down one right now. Our technicals are still positive. They are showing some improvement, and we're above the 20-period moving averages. If anything, we would default to the positive side, but be aware that we're still dealing with quite an overbought condition. We're not going with the sideways trend right now because our ADX is they've dropped below 40, but they're declining below their moving averages. The warning signs. Growth is showing some improvement here, but it's still, we need to see more follow through with this. The risk on posture, it declined on an up day, not a real encouraging sign. This longer term negative divergence that we're seeing between the Dow and the transports, that's concerning. The 1 to 3 month short term bond spread, it continues to be positive where it should be negative. The Copic curve continues to be negative. The oscillators continue to roll over. We're below their moving averages, and we're still coming off of extreme positive readings. The momentum for the NASDAQ 100 is showing some improvement, but it's still negative. The positive signs, our daily special K chart is positive. I couldn't update the equity put call ratio charts. I waited and waited, and those charts were not updated by the time I got ready to record. I'm just assuming, of course, you know what happens when you assume, because we had the update that the 5 period and the 253 period are continuing to decline, which is positive for the market. This is kind of a big thing. The parabolic SAR has turned positive. The bullish percent index is extreme positive and coming down, but it's still positive. The vortex is crossed back positive. That happened a couple of days ago. The Zohorchek method has not changed. That's positive. And we're still dealing with recent golden crosses with the Russell, the small caps, and the mid caps. Small and mid cap growth, it's kind of coming back up more into the mid part of its range right now when we compare growth to value. And the financial sector continues to do well. We'll have to see if the bank earnings coming in, if that's going to help the financial sector to show more improvement. And our longer term 50-period moving average study on the S&P is still positive. So our conclusion, we're positive and for right now, showing some improvement. We're still above the 20-period moving averages. That's what we say for the short term. In the intermediate term, we still have a lot of overbought or extreme positive indicators that we're seeing. We still remain positive in the long term, but we have those longer term moving averages that are still extreme positive. Thank you. I really hope you found this helpful. I hope you have a great day, and I will talk to you in the next video.